What I love to do is introduce the right people to the right people.
I assemble the smartest people I can think of or reach out to carry that conversation, and that's exactly what I've done today.
Please give my panel a round of applause. Welcome.
Okay, what's up guys? Jay Martin here, CEO of Cambridge House, and I'm joined right now by Mitchell Demeter. Mitchell is a serial entrepreneur. He's the founder of the world's first ever Bitcoin ATM, which I can't wait to dive into that story, and the president of Netcoins, among many other things. So Mitchell, thanks for coming on. It's good to chat with you.
Thanks for having me on, Jay.
Okay, now the reason I wanted to sit down with you today is because I'm a gold investor and I'm a crypto investor. And I invest in both actually quite similar. It's very passive, right? I'm quite aggressive in the capital markets, but when it comes to my crypto and my gold holdings, I dollar cost average in. I don't lose any sleep looking at the price. I like to have a position in the horse in the race, but I don't trade it necessarily, right? The reason I wanted to sit down with you, Mitchell, is because you're one of the only people I know who's been up close for now three crypto cycles, bull markets, right? 2013, 2017, and then today, and active in the space the entire time. And the first business that I've known about was that you and a group launched the world's first Bitcoin ATM in a coffee shop in Vancouver, Canada. And so I want to jump into that story a little bit. Walk me through that process, when you did this, what you saw at the time that inspired you to do this, and we'll start with that.
Yeah, absolutely. So me and a couple of friends originally found out, or I originally got introduced to Bitcoin through a couple of friends back in January of 2013. And at the time, it was really difficult to buy. And we had kind of met a few people that had been doing some mining, and they sold us a few coins, and then we ended up wiring out some money to an exchange in Slovenia and waiting a few weeks to see if the money would arrive. And another time we were kind of just helping people buy and sell. And
what year was this, Mitchell?
This was 2013.
Okay,
this was about January 2013.
Yeah,
and yeah, so basically at the time didn't really start out as a business, but if somebody that I talked to wanted to purchase some, I'd sell them some of mine, and then I'd try and, kind of buy it back on the exchange that I had some money on. And from there, I ended up losing more money than I would have made, because I would sell some coin, and then by the time I bought the coin back, the price would have gone up.
Right.
And so from there, I kind of realized that there was an opportunity to turn this into a bit of a brokerage. And I could hold a US dollar float on the exchange. And then when somebody wanted to buy, I could add on a percentage and buy the coins in real time.
Right.
And so that kind of was the beginning of the brokerage business. And so that was kind of January, February, March-ish of 2013. At that point, we were still it was kind of peer-to-peer, and we were meeting people in coffee shops and that type of thing. And there was a couple of situations where we would meet somebody, and the entire thing was so new that people were kind of uncomfortable, and we're dealing with cash, and people weren't really sure how many confirmations we needed to wait before Bitcoin was actually secure on the other side of a transaction.
Yeah.
And so basically what we decided to do is to set up a retail location where people could come, and we would be there every day. And if something went wrong or if they had questions, then they knew where we were, and try and take the risk and make people more comfortable. And basically just, create a trusted brand that people would come to and talk about Bitcoin and buy and sell. And so at that point, it was still really new. Nobody really knew what we were talking about, but there was a decent sized community in Vancouver that was picking up to it fairly quickly, and the business grew really quick. And so at the beginning, our plan was to go across Canada and set up these brick and mortar locations where we could just open up an office and people could come in and buy and sell. And that's when we found a company down in Reno, Nevada, that was starting to manufacture Bitcoin ATMs.
Okay.
And so we made a deal with them to purchase the first 5 Bitcoin ATMs off the line. They were happy to partner with us at the time because, we were one of the only operations potentially in the world at the time that had already been running the business model successfully. And so in November of 2013, we ended up getting that first Bitcoin ATM. And we partnered up, sorry, not partnered, but we made a deal with the Waves in Vancouver to put the ATM there. And that was kind of the start of the ATM business for us.
Which is hilarious. That's the coffee shop I used to study at when I was in university. I know. Yeah, I've been there forever. Okay, now I'd love you to run me through, just because you were early, and with a pretty innovative idea, being a Bitcoin ATM at a coffee shop in Vancouver, Canada in 2013. You had to have faced some sort of unique challenges along the way. So, and we touched on some of these before we hit record here. When you started to expand or attempt to expand, where were you looking first? Where did you end up? And talk to me about that process.
So our initial plan was to launch these ATMs across Canada. And we had secured 5 of them. Our plan was to hit the major cities. And our first stop was going to be Calgary. And so we had great success with the Vancouver location. We were excited to get Calgary up and running. One of my partners and I flew out to Calgary to go scout out a location. And as we landed in Calgary, we got a call from our bank, and they decided that they were closing our account. And at this time, Bitcoin was still super new. Banks didn't really understand it. Nobody really understood it, that well, to be honest. But the banks really, didn't want anything to do with it. And so at that point, we had been having some conversations with some people around the world, kind of different communities in different big cities. And we had been talking with a gentleman out in Singapore, and he had told us that the banks were a bit more friendly to crypto out that way. And so at that point, losing our Canadian banking, and we had tried with a few different avenues to secure different banking in Canada without any success, we decided to go international. And so we went out and we partnered with a gentleman in Singapore. We made a partnership in Tokyo, one in London, and one in Bucharest. And that's where we shipped the additional 4 ATMs. And the idea there was to basically, partner with these local communities and brokers in those cities and kind of build up that global presence. And then stage 2 of that was to build an online exchange and run all the liquidity and all that trading volume through that online platform. Okay.
Now I want to talk about I want to have you compare the cycles that you've seen since you've been in this market, because you've been through 3. And, a lot of the personalities that I talk to on this show, Mitchell, are gold investors, precious metals investors. And if they've been around a long time, they can talk to me about, 4 or 5 bull bear market cycles in the commodity sector. And it's incredibly valuable to get that perspective, right? Because it allows you to step back from the near term volatility and look at things from a 30,000 foot view. Before we jump into that though, I just got to touch on this because you were introduced to Bitcoin indirectly through Peter Schiff, which is hilarious. So just tell me that story real quick.
Yeah, that's right, Jay. So basically, before I was introduced to Bitcoin, I was really into gold and silver. And I was actually introduced to sound money and the concept of sound money and gold and silver through Peter Schiff. And in the middle of 2012, I had just finished reading one of Peter Schiff's books. I believe the name was, it was America's Coming Bankruptcy. And it was basically talking about the issues with the U.S. currency, the issues with fiat currencies around the world, and basically what sound money is and how that's essentially the solution to these issues and the impending crisis that's connected with fiat currency. And so that really resonated with me, and I understood that principle. And then when I discovered or was introduced to Bitcoin, a lot of that kind of crossed over, and I had the light bulb moment really quickly. It all made sense that it was a potential alternative to gold, and it was a potential version of sound money that was better than gold. It can be transferred around the world instantly. And so it is kind of funny that ultimately Peter Schiff brought me to this, and unfortunately he hasn't made the connection himself yet, but that's an ongoing discussion, I'm sure.
Yeah. Well, it's funny, right? Because it is the concept that it's essentially gold bugs have been waiting for forever. Like we're not, I invest in gold and I'm very bullish on gold, but I'm not a gold bug. And I I think I'm aware enough to know we're never going back to a gold standard. I don't think so. Bitcoin provides a lot of the solutions that traditional precious metals investors and libertarians like Peter Schiff were looking for, right? And I've questioned him about this a few times, but he's dug his trench, he's got his arguments, and he'll stand by that. The most hilarious response I got was from Ronald Stofferly when I asked him about that, and he said, "Look, a bubble is just a bull market that you don't have a position in. That's the problem here."
Yeah, absolutely.
That rings pretty true. Okay, so what are you seeing today, Mitchell? I mean, we're now looking at I think, today is February 9th for context. So just yesterday, Tesla announced their large position in Bitcoin. I've been kind of waiting for retail mania to catch up because there's been a lot of really smart dollars enter the crypto space in the last 6 months. The reason that's significant to me is because I was building technology conferences across Canada from 2014 through to 2020. And so, 2016 and 17 and the beginning of 2018, we couldn't find enough blockchain or cryptocurrency deal flow to satisfy our audience. It became a mania, especially at the end of 2017, 2018. And that historic rise in price, that bull market in the crypto price, from my perspective, and you can tell me if I'm wrong here, it seemed to be really driven by the retail investor. It was small money entering the space in large number, right? Now that's different this time. We're seeing the smart money enter the space first, and now retail follow. But am I on the mark there, Mitchell, or what are you seeing?
Yeah, I think so. Back in 2013, that first cycle that I was part of, I think that was fairly heavily retail driven as well. It was really grassroots. It was a lot of peer-to-peer, and like there were days where a few people in our kind of small circle or in the small Vancouver market would kind of go on these exchanges, and $20,000-$30,000 would actually move the market a significant amount, and the price was just low, and there wasn't a lot on these exchanges, and so we were in the early stages of price discovery at that point. And so we saw it move really quick, but it was still really under the radar. Like there was a little bit of mainstream attention kind of like as things heated up, but ultimately, there wasn't near the same level of sophistication or sophisticated investor getting involved. And there wasn't even really the same volume of money coming in, I'd say. And then 2017, I'd say was similar. It was kind of the second cycle that was in the mainstream media at all. And so I think it started to get more attention. People were making a lot of money at that point. And so anytime people were making money, the sophisticated investors started to pay attention. But I'd say it was still retail driven. And, the smart, patient money usually kind of waits to see if something is a fad or if it's here to stay or, before they put any significant amounts in. And what I'm seeing now is, this is the third cycle that I've been part of, and it's been about 10 years now. Since Bitcoin's been trading, and you've got all these financial products being built, and the really sophisticated, larger investors are coming in and saying this is actually something we need to pay attention to. And we see the likes of Elon Musk coming in and loading up the treasury with Bitcoin, and I think I think we're still early stages in this cycle, and I think MicroStrategy was obviously the first. They kind of made it acceptable. Now you've got this Fortune 500 company coming in, and I think it's almost going to be looked at as irresponsible to not have Bitcoin on your treasury, or in your treasury. I think we're going to see this FOMO cycle is actually going to be institutional.
Interesting. Yeah, I think you're right on the money there. There's definitely going to be that question in boardrooms at, AGMs across the world. Why haven't you looked at Bitcoin for your corporate treasury? It does change the game. Now, you touched on it. You think we're still early days in this cycle. I'm not going to ask you to time the market. We don't do that. But I am curious about, because the day over day or the week over week volatility is what it is. But when you step back and look at the broad stroke cycle, you could maybe make a prediction about an eventual correction in the price, right? How much though will that be impacted by the fact that companies like MicroStrategy's, Tesla, Square. I mean, these are held by massive funds all over the world, held by the Swiss National Bank. So indirectly, these mega corporations have huge exposure to the crypto price. I wonder at what point, will we get to a place where we see far more stability, far less volatility, and then increasing appeal from larger scale money managers?
Yeah, I think over time the volatility will decrease. I think when I say we're early stages right now, I think basically Musk just gave every CEO or CFO permission to go and do this. It's no longer taboo. Michael Saylor held a presentation last week with about 7,000 people in attendance, basically giving them his playbook and justifying his move in MicroStrategy. And so we're still early in the education process for these big money managers, and so I think it's definitely dampened the volatility so far, because over the last few months it's still been volatile, but basically Tesla was buying larger amounts anytime the price dipped down below 1.5%, and they had increments being bought every minute, and so I think we'll probably see an accelerated increase as more of these companies start buying. But I do think we will at some point get overbought, and we will see a correction. I think that it's just kind of how these markets work, and it's what we've seen over the last 10 years, and we see this in other industries. There will be some people that buy the top, and it only really matters if you're trading, right? Like over the last 10 years. We've seen about 240% annual or average annual increase in the price. And so, I always tell people, it's safest to dollar cost average in. Don't worry about the price. I know you talk about this strategy as well. And I think that makes sense. I think when you compare this to holding US dollars, which is scheduled and intended to lose purchasing power year over year, and you look at what it's done over the last 50, 60 years, then this is basically a savings account. And if you're storing your money here and you're not worried about the day-to-day swings, then ultimately you're going to be able to preserve purchasing power.
Yeah, I love that, the savings account analogy. And I know that may sound crazy to some people when they look at the volatility and they're like, how could you possibly call that a savings account? But honestly, Mitchell, that's how I think about my position in the crypto market. And it takes a bit of getting used to if you're not used to watching your position adjust with such volatility, even on an hour by hour basis. But, what are your options today? That's the question, right? Like, where else do you go? Right? Where else do you go? Which gets me to what I want to talk about next, which is your current endeavor. You've been involved in so many companies, and I want to talk about what you're doing right now. What struck me about Netcoins, I think in your mission, you guys talk about achieving or providing personal sovereignty to the user, right? Which struck me. I mean, that's a lot of the messaging behind this channel. I think a lot of people are coming to that realization right now, or this year more than ever, that they need to find a way. We need to find a way to take ourselves, like protect yourself. No one's got your back at the end of the day, right? This system is kind of out of control. We're probably in the logical conclusion of our financial system, whatever shape or form you want to call that, and however that will unfold. But now more than ever, it's hyper important to take care of yourself first, right? And so talk to me about Netcoins. What do you guys do? And let's start with that. Give me the 30,000.
Yeah, absolutely. So Netcoins is basically a platform that bridges the gap between fiat currency and the crypto world. We've made it as easy as possible for people to get their dollars into crypto. Right now, we're primarily servicing the Canadian market, but we're exploring expansion into different jurisdictions over the next year. But yeah, basically, we've just tried to simplify it and take all the friction out. Right now, you can email transfer money in to our platform, and you'll have those funds available to buy Bitcoin and withdraw off the platform within about 5 minutes. And so this kind of goes back to that initial mission that I had 8 years ago of making this stuff accessible and then helping people understand it. We just built out a crypto academy on the site that addresses a ton of those questions that people have when they first want to start learning about Bitcoin. And so yeah, those are the two primary things. Just the fiat on-ramp and off-ramp, get people in and out of the market with as little friction as possible, and then help educate people on why we're doing this and why this is important.
Okay. And you are a public company. The ticker is BIGG, listed on the Canadian Securities Exchange.
Yeah, that's good.
So for investors taking a look, Mitchell, what can they expect from you over the next 12 months?
Yeah, so we've been growing rapidly. The last year we had a ton of growth, and the last couple of months have just been absolutely insane. We're currently looking at adding a few different features over this year. Our primary focus is just sustaining the growth that we've had, and luckily we've been able to do that. We're onboarding. Throughout the month of January, we did a 2.5 time, or added 2.5 times the users over December, and that's kind of the rate of growth that we're seeing right now. And so it's been, our primary focus is making sure that we're servicing those new users at the level that we want to, including live phone support, live chat, and basically just making sure that everybody there is taken care of and that we're sustaining that growth. There's a few other really interesting things that we're looking at doing, and one of them is potentially adding borrowing and lending through the platform. So right now, there's a lot of countries around the world that are moving towards negative interest rates. And obviously, these rates are set by central banks. The UK just announced that within the next 6 months, they could be looking at negative interest rates. I think there's a high probability that we're moving towards this in Canada. And, one of the interesting things about crypto is we've got the ability to have free markets, and we've got kind of true markets where people are on the bid and ask around the world all the time. And so the price is being set. It's not being basically set by a central bank. And so with the same premise as the crypto markets and the way that those move, we've got borrowing and lending markets evolving in this space. And these are being utilized through things like stable coins, where you can actually switch your US dollars into USDT or USDC and lend it out for an interest rate that you just wouldn't be able to get at your bank. And right now, those rates kind of range between 8 and 12%. The other side of that is you can go in and you can lend out your Bitcoin or lend out your stable coins and borrow more money. And so basically, those are two things that we're looking to add this year. I think there'll be additional great revenue streams, but there'll also be great tools for our users. Just the ability to actually switch your fiat currency and earn proper interest rates, that isn't really accessible to the average person right now, I think is huge.
Okay, thank you. And for anyone who's not familiar with the trading platform model, Mitchell, how do you guys make money?
We charge a transaction fee. So anytime somebody buys and sells, we charge a fee on that. There's no deposit fees or withdrawal fees at this point, but it's all about buying and selling.
Okay, got it. Okay, look, Mitchell, it's been awesome having you on, catching up. I'm going to keep my eyes on the story, and I appreciate your time.
Beautiful. Thanks for having me on, Jay.